Welcome to Illuminati Silver. We tell you the truth about silver. Today is Wednesday, the 20th of November, 2019. And earlier this morning, we published a video entitled Gold and Silver Rise as US-China Trade Talks in Jeopardy, where we highlighted that US stocks fell yesterday and gold and silver prices have risen, albeit slightly, as the US-China trade deal may either be delayed further or in jeopardy. Unless, as President Trump tweeted, quote, China is going to have to make a deal that I like. If they don't, that's it, unquote. And China's Commerce Ministry stated that removing tariffs imposed during the trade war is an important condition to any deal. So since then, yesterday that is, gold has risen some $20 and silver is up over 30 cents. While the Dow Jones had fallen over 100 points. What we failed to mention in today's video is today's reaction by European markets and Asia-Pacific markets, which we are covering now. Whilst we, to a degree, underplayed the US reaction to this trade deal jeopardy, because as yet it's not fully fermented, across the pond and in Europe it is fair to say that the official reporting is, quote, European stocks were on track for their worst single-day performance in 6 weeks, following concerns over the US-China trade talks, unquote. See, the US Senate yesterday approved a bill to support human rights in Hong Kong, prompting China to threaten, quote, strong countermeasures, unquote. In addition, President Trump threatened to raise tariffs with China further if no deal is reached. The editor of China's Global Times, a publication which the Chinese authorities frequently use as a mouthpiece, tweeted that, quote, few Chinese believe that China and the US can reach a deal soon, unquote. Well, the European stock index fell by 0.8%. The FTSE 100 index is currently down 1.4%. The DAX is down nearly 1%, the CAC index 40 is down 0.75%, and the IBEX index is down 0.85%. In addition, Asia-Pacific markets are down, the Nikkei 225 is down 0.6%, the Tokyo Topix index down 0.33%, the Hang Seng index down 0.75%, and the CSI 300 index down almost 1%. And US stock futures, the SOO or 00, is also weaker at 0.34%. Now again, to put this in perspective, these falls are still relatively small, but could be a sign of things to come if a trade deal is not agreed. Also, contrarian investors and analysts are now predicting that the Dow 28,000 level could mark that blow-off top that bears have been predicting. The Russell 2000 index is also showing negative returns, which is not a positive sign either. Now, in addition, to add to this, earnings per share for the S&P 500 index SPX is down 0.06% or minus 0.06%, and companies are on pace to remain virtually unchanged through 2019, according to FactSet data. Despite this, the benchmark S&P 500 index has risen 25%, and the Dow Jones Industrial Average has gained about 20% this year. What's worse, economy-wide corporate profits have been flat since 2014, at least according to the US Commerce Department. So the reason to a large extent that these stock market gains have been achieved is not the result of earnings per share rising or corporate profitability, but because, to a large extent, of the steep decline in bond yields, including overseas treasuries, many of which are in negative territory, thereby making equities, and in particular US equities, and we've produced a number of videos showing that global funds are very heavily weighted towards US equities, thereby making these equities, even with low growth rates, that much more attractive. Now, our view is that despite these worries and concerns, equity markets can still rise, but only if there is a trade deal. They will eventually fall back, but if there is no deal or it is delayed too far into the future, then the fear factor will again set in, causing equity prices to fall, and sharply, and gold and silver to rise as being one of the safe haven assets to flock to. Meanwhile, it's still worth noting that the dollar index has risen slightly to 98, showing once again that the US dollar still remains what some currency analysts may refer to it as, quote, the best of a bad bunch, unquote. So we hope you find this additional update of use. Thank you for listening. Do share your thoughts, and if you haven't already done so, please subscribe to our channel, press the bell sign so that you're notified of future videos, and if you can, pop along to illuminatisilver.com and sign up as either a free or paying member. We hope you have found this video interesting and informative, and if so, please give it a thumbs up and share it on social media. Please ensure that you have subscribed to our channel and press the bell sign so that you are notified of any future videos. Also, kindly visit our website at illuminatisilver.com, and if you haven't already done so, please subscribe either as a free or paying member for regular email updates and offers. Disclaimer: Illuminati Silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.